Hello everyone, welcome to Eyes Open FX YouTube channel. So today we'll be discussing a trading hack, which I believe you probably might not have heard of it before or how it works. This is what I call time frame difference. Apart from the time frame difference you have heard from me, so this is advanced part of time frame difference. So how do we use it is basically understanding the basic principle of structure, which is from higher time frame, right? Understanding higher time frame structure. Now let's take for example. This pair is Euro AUD, right? Euro AUD. Now, since we have this Euro AUD right here, the first principle you have to understand is the narrative of higher time frame, right? Higher time frame. So the first thing to understand is the trend of higher time frame. So basically around here, we're bullish, and here we're bearish. Right here now, we're bullish, right? So the market is creating something like this, upside, right? Uptrend movement. So this is what we expect. Okay. So since we're expecting this, we note the structure range or the current structure range where we are. So the current structure range is this, which is uptrend, all right? Because market is here to break this low, neither it's a recent high, all right? On this one right here. So since this is our current range, the next thing we focus on is this. If market break one low, don't consider that to be pre-break structure, all right? Especially when it's not coming from a special POI, all right? Like let's say engulfing SC candle or engulfing other block, any of it that you will call it, right? So since we have this right here, this is our current structure range. But inside this current structure range, we have another structure, which is downtrend right here. Lower low, lower high, lower low, lower high. On this time frame, it is simple. And the idea of structure is basically simple. First, you have to understand the higher time frame. This is what is happening on higher time frame. Basic structure. The advanced structure, you will have this. Is the basic structure is from higher time frame. The advanced structure is lower time frame. So we always use time frame lower. So since this is what is happening on monthly time frame, so we will expect market give us the overall trend, right? Just the overall trend. So now, in terms of understanding this basic structure, next thing we need to understand is what's happening on time frame lower. So that means this is monthly. We go to daily. So on daily, from here, what you have is something like this. All right, which you probably will not see this major time frame. But when you go to lower time frame, we see it, right? Whereby it can grab liquidity, one structure, then give another pullback, right? This is what you will likely see on lower time frame. It can be grabbing liquidity or breaking structure. But on higher time frame, it is straight point, which is what gives you the overall idea of market. So since we have this major time frame, which is this and this, so this become our current structure range. So this is a series that we do for a while now. Once we are done with this series, I believe most of you that have been messaging me on across all my social media will understand more about the market. Right, so this is a basic range. So the next thing you scale in lower time frame. So we first scale into weekly time frame to understand what market is doing. So on this weekly time frame, you see how market grabbed this liquidity, which was not visible. That monthly time frame, grab one liquidity and continue the bearish flow. So we have a POI right here, the candle. The market is yet to trade into it, though almost at that point, almost at that particular point. So we have low, high, so and we have a special POI just right here. So based on this time frame, we can actually consider this high be a liquidity high. If market will continue bearish order flow, at least maybe it can absorb this low before buying. Very, very possible. All right. So since we are bearish on this time frame, which is this become a current structure range. So once you understand your current structure range, everything becomes simpler. Now, after understanding your structure range, The next thing we go into is what we call liquidity, so which I will explain. So understand the basic principle of market, which is from higher time frame, before you understand lower time frame. So this now, let's say for example, when market was around here, after this break of structure right here, and this high, all right. So we'll go. So on this daily time frame, we can see what market is doing here, which is bearish order flow, and around here, this is what we call on this time frame. This is this structure. We can see it on this daily time frame, which we can see weekly, neither on this one right here. All right. So these little ones, these are daily structure range, because we can't see them higher time frame. So that means they belongs to daily time frame. And that is basically the idea of what time frame difference, the time frame that those structures belongs to. So since we have this right here, so the next thing you will consider is what EOI, which you can consider this white candle right there. So which market did to before this sell. So as market traded into it, give us what a basic idea of downtrend by breaking structure right here. We'll learn more about the idea of break of structure. I use break of structure, POI with break of structure, right? We'll learn more about it, right? In terms of the concrete idea of it, apart from the videos that you have watched on this my YouTube channel about the structure and all. So we go deeper into it for you to understand more about market, and because all this while I haven't been that much active even in my Signal channel, and all, but I'm fully back now, and I believe you will enjoy it fully. All right. So since we are bearish now, market now would continue the bearish order flow after trading the higher time frame POI. So on this daily time frame, we can see the uptrend that market offered us, which will not be visible on monthly time frame. So this is daily structure. So you trade it based on daily rules. So the structure pattern will be based on this daily. If you are going to 1 hour time frame to follow this trend, we'll have that initiative that you are following what daily range. So this is the last daily structure range. This is the last daily structure range. As market get to this area, as it's retracing back, you will now scale back daily structure, which is this time frame. Understand where market is coming into this range, especially if there's liquidity. Because there are sometimes if there's no liquidity, which we're going to, can rate this low forward, creating a higher high. Right? That is the idea of liquidity. So this is a new series which I believe you will enjoy. So this is the first part of the series. We'll go deeper into this series, explain this basic structure with time frame difference and everything about it. So that is all for today. So good luck. See you guys in the next series.